Peace, guys. Welcome back to ZENSFXHUB, where macro markets is simplified. And in today's slide, we're going to talk about a possible U.S. government shutdown and what this could mean for markets. All right, so let's go ahead and get into it. I don't know why I keep doing that. All right, okay. So, objective, right? I'm going to explain exactly what a U.S. government shutdown is, break down what occurs if it what happens if it does occur, explain what it means for markets if it doesn't, and separate short-term headline noise from the real macro impact. So, what is a government shutdown? This happens when Congress fails to pass funding bills. Pretty much when political parties cannot agree on spending priorities, they have to shut everything down until they get on the same page to say, okay, we're going to put money here, we're going to put money here. But until then, they shut the government down until they can figure that out. So, federal agencies without approved budgets must pause non essential services. Government employees may work without pay temporarily. Essential services continue though, like the military, law enforcement, markets, stuff like that. Markets do not shut down and liquidity does not disappear when the government shuts down. And I don't know if you remember the last shutdown we had last year to in the fourth quarter, where on Instagram and like social media you were seeing like TSA workers saying like, hey, we're not checking your bags and stuff like that, because those are considered government employees and they weren't getting paid. So they're like, okay, if we're not getting paid, then we're not doing our jobs, pretty much. So, how markets are impacted asset by asset. So, stocks, you'll see a short term pullback. Most damage in stocks, right, come from government dependent sectors. So, for example, government contractors, transportation tied to federal funding, healthcare companies that depend on government approval. So, being that the government shut down, they have to pretty much be on standstill because they can't get what they need from the government. The US dollar, initial strength from fear, because it's considered the US dollar is considered a safe haven. So, when there's uncertainty and fear in the market, safe havens get bought up. So you'll see, initial strength from that. Weakens if the shutdown drags on. Why? Because prolonged dysfunction puts pressure on investors' trust. So pretty much investors like, yo, the US ain't got their shit together. Let's move our money elsewhere. Let's buy up other safe havens like the yen, the Swiss, and of course gold. Okay. And you can even throw Bitcoin in there and silver in there if you want to as well. When it comes to gold and silver, benefit from the political uncertainty, stronger if yields fall. So when yields drop, holding gold and silver becomes more attractive. So you'll see those assets, go up in value. Real move happens if the shutdowns last, not in the first day. So if the shutdown happens January 30th, you're not gonna go see gold and silver freaking fly, right? But as long as it like drags on, then you'll start to see gold and silver continue to make new highs and stuff. So if the shutdown is avoided, the market will react on like this is how it will react. So they'll have a reef rally. So pretty much like I said, stocks will pull back. But if it doesn't happen, it will do the opposite. It will actually go up because it's like, okay, you know the government got it together. They know what they're gonna do. So okay, whew, we're good. So you might see those things shoot up. Volatility drops. Okay, so it's not a lot of uncertainty and dysfunction going on. So it's like, okay, like the markets may trend more smoothly instead of just big spikes to the upside and big spikes to the downside. Headlines fade quickly. Okay, so avoiding a shutdown does not change the bigger macro trend. Markets immediately refocus on inflation data, interest rates, expectations, and central bank policies. So pretty much, right? Whenever there's a government shutdown, like things like unemployment rate, GDP, inflation, interest rate decisions, those things do not drop. So if you're going for X Factory and okay, this week we getting employment, we getting this, we getting that, those things would not come out because the government is shut down. But the moment the shutdown is over, we'll either get the data or we won't get it. And we've seen this last year. If you want to go look at what happened last year, just to see exactly what I'm saying, you can go ahead and do that your own little research, give you some little bit of homework instead of doing it for you. But so yeah, that data is at a standstill until the government shutdown is over, and then once it's over, then like I said, the macro viewpoint, they go back to looking at the data that actually moves the markets. Okay, so what does not happen either way? So whether a government shutdown happens or if it doesn't, Okay, these are the false expectations that people think. Okay, there's not an automatic like market crash. Like, okay, the government shut down, is shutting down. The government isn't shutting down. Markets is gonna go crazy. No, it's not gonna be like that. Okay, no structural change by itself. So, like for example, everything that's going on fundamentally and the macro economics when you put it together, like for example, with gold shows that gold is going to continue to make new highs in 2026. Just because the government shut down, or if it doesn't mean that it's going to change the trend of the overall trend of gold. Gold is shooting up to 6,000, maybe 7,000 an ounce. Okay, that's just my opinion. And whether the government shut down or not, gold is still going to continue to shoot up. So that's what I mean by that statement. It's not going to be a 2008 moment like how the markets went immediately crazy during the 2008 recession. Okay, so shutdown spark reactions, but it doesn't create trends. It just gives you small movements to the upside or downside depending on what side are we on, and that's about it. The real macro questions, like what markets truly care about, and this goes back to what I said. Like after the shutdown is over, markets go back to looking at inflation and all that other stuff, because those things are important, and those things is what move the market and make pretty much tell you the health of an economy. Okay, so they go back to focusing on real rates, liquidity, inflation movement, and policy decisions. Okay, so shutdown headlines only matter if they impact these variables. So if a government shutdown is impacting the central bank's decision to do rate hikes or rate cuts, then the markets will be like, oh shit, you know what I'm saying? But as long as it doesn't impact these important things, like whether inflation is going up and down, stuff like that, it's really just a small little itch that just needs to be scratched real quick. It's not like a big thing that needs to go to surgery type of thing. I'm trying to give you an analogy, but I think I did a very bad job. But anyway, they're focused on the main important things, which, like I said, when you collect the data, that actually tells you the health of the economy. Okay, so if those things do not get affected by the government shutdown or not shutting down, they can care less. They just like, okay, we'll just like ride this wave until it's over. So traders take away. What I want you to take away from this is don't trade the headlines. I mean, if you want to, you go ahead. You could trade the spike up and down. That's you. Make sure you're risking properly. I always say this. Make sure you're risking properly. But that's on you. But for me and the people that I'm trying to attract to my channel, we are, fundamental swing and position traders. Okay. So we're not gonna sit there and be chasing headlines. We're gonna just collect the data, figure out how this is gonna move, how it's gonna move. We're gonna get in, we're gonna hold type shit. All right. So shutdown equals short-term volatility. You can capitalize off that. Not gonna lie. So I'm not gonna sit here and tell you can't trade this stuff, because you can. No shutdown equals short-term relief, but long-term direction stays the macro driver. Okay, so smart traders protect their capital by not trading headlines, but by trading the alignment, which goes back to what I said before. Pay attention to the things that actually matter, not the headlines. The headlines is just little sprinkles on top of the cake, but it's not the whole cake. For me, I want to know what's going on in the whole. I need to know what the whole cake is, what ingredients is in it, how long it's gonna be baking, how long the shelf life. Like, I want to know what makes up this cake, and not just worry about all the little sprinkles and the little writing and stuff like that. Okay, so headlines is the decorations on the cake, and the macroeconomics and the fundamental side of it is like the whole entire cake, like how you make the cake, form into a cake. You feel me? So if you found any value in this video, please like and subscribe, okay? And once again, if you're going to trade this information, please make sure you're risking properly. This is not financial advice. This is just me, coming to you guys, making sure you guys are educated so you can go out into the world and be successful, profitable traders, okay? So I'll see you guys in the next video.